Welcome back. Let's straight away get this conversation going with PB Fintech. The company has been in the news of late because there's been a fair amount of chatter on whether they are looking at a full-blown healthcare foray, and if yes, then what is the shape and form that this foray could perhaps take. We have with us Yashish Dahiya, Chairman and Group CEO at PB Fintech, and Alok Bansal, the co-founder and executive VC at the company as well. Gentlemen, thanks for joining in. Yashish, morning. Let me just, take the straight question, the elephant in the room. Describe to us, when you say we want to enter the healthcare space for improving customer experience, what does that mean? What is this network that you're looking to build? And also the critical question from a market perspective is, are you going to start building hospitals or buying hospitals? Because that involves a lot of cash and that becomes an asset-heavy business model. What are you thinking?
Yeah, first of all, let's just clarify one thing. PB Fintech is looking to make an investment subject to board approval in a separate venture, which actually is not a PB Fintech subsidiary. PB Fintech would probably be a minority investor between 20 to 35% equity holding, right? And this venture, for lack of a better word, let's just call it XYZ. XYZ has its own life beyond that, and PB Fintech's liability is limited to that first investment. It does not have any compulsion to keep investing into the future, right? And all this is subject to board approval. Now, what is XYZ wanting to do? And what is PB Fintech's interest in XYZ, right? XYZ just looks bad, so let's just keep calling it XYZ. So XYZ wants to build an HMO. What is an HMO? HMO is an outsourced facility of hospitals which is aligned to the insurance industry. Today, 4 crore 40 million Indians are buying health insurance, and they pay about 10,000 rupees every year to the insurance industry for this, which is about 40,000 crore rupees. And they say, look, whenever any of us 4 crore fall ill, you take care of our expenses. When they go for these expenses, they have something called a claim. And in that claim, there is a lot of pull and push. Why is there pull and push? Because there is a lack of trust between the insurance company, the hospital, and the customer. And one of the ways to align for this what is the lack of trust, right? Insurance companies feel this treatment may or may not have been required. This was an over-hospitalization. This was an overcharge. This particular cost should not be included. Now, at the same time, healthcare costs have been rising. ARPOBs have been going up. ARPOBs have increased by 40 to 50% in the last 5-6 years. And that is not something that eventually who has to pay for it, either the customer or the insurance company. So an ARPOB increasing is great for the profitability of the hospital, but an ARPOB increasing is not great for the insurance industry or for the customer, for that matter. So this is a big pain point of conflict. And what this does for the customer is creates...
Yashish, hi, morning. Morning. We'll just come to some of the details in just a bit, but you gave us the headline straight up. You said that PB Fintech, essentially you're incubating a separate company and you are going to put in...
We are not even incubating.
Okay, we are not even separate company. It's going to be a separate company in which PB Fintech will have 25 to 30%. Possibly subject to board approval.
Yes.
Okay, 20 to 30%, subject to board approval, and I'm assuming subject to shareholder approval as well, right? At some point, could you tell us what is the investment that you're looking to make?
It might be somewhere between $0 to $100 million.
$0 to $100 million, and you're saying that it's not necessary that after that initial investment,
it's a one-time investment. Okay. It is not a recurring investment.
But after that, will there be some sort of assurance that you will not put in more money to work?
After that first assurance that way, nor is there an assurance that we will keep putting money, right?
Okay.
The intent is not to have a recurring investment. The intent is you put in the money first time, and after that, the company has its own corporate governance and its own objective to carry on. And whether that company does an IPO, whether that company raises money, think about it. When Info Edge invested 20 crore rupees with us, the maximum Info Edge could have lost is 20 crore rupees. InfoEdge did not have any obligation to carry on investing. After that, Intel Capital came, then Inventors came, and then Tiger Capital came. But InfoEdge did not have the obligation to keep investing with us. And
No, okay. I completely
was not getting into the insurance distribution business.
No, I completely agree. And I want you to explain this HMO as well, but just the basic hygiene details, if you can. Will it be north of $50 million? Will it be closer to 100? I mean, some sense.
We don't know right now. It's 0 to 100. PB Fintech might prefer it to be 0. But if an industry utility is being created, PB Fintech is interested in that industry utility doing well, it may invest up to $100 million. But that's the broad range. And that too is subject to board approval, right? It's not like management can go and do it on their own.
Okay, just a question. Yashish, you said obviously it's all subject to board approval. When do you take it to the board?
We're not in that stage yet. See, you guys and, I think ET basically broke the story somehow. But we're not in that stage when we are going to the board kind of tomorrow or anything of that sort.
No, but I understand, but that's why this conversation is really helpful so that investors exactly know what's the thought process, and it'll take its own due process. I mean, board approval, etc.
I would say that time frame is perhaps quarters, not years.
Okay.
But yeah, it's quarters. It's not weeks.
In this year? In this year, this financial year, or the next?
How do I know? It depends on where the other partners also get together, right? It's when that company says, I'm ready, I finalized all my investors, and now is PB Fintech ready, is when we would have to take it to the board. We can't take it to the board till that company, XYZ, tells us that I am ready with all my other partners. And
fair.
We may now invest.
Fair point.
It's not something we can control.
No, fair point. Absolutely. So, which is why let's go back to the original point that you were making. Now, we've understood that PB Fintech will only invest 20 to 30%. I mean, that's the extent of the stake. And it could be, the cap is 100 million. That's what you've kept in mind, at least as of now. We've understood that. Now, let's look at the contours of this new healthcare company that you're speaking of. Apart from PB Fintech, who are the other, potential, co-founders? How is this going to be set up? And again, what's the strategy? Not buying hospitals, setting up hospitals, working with a network of hospitals. What's the model? And has this been done anywhere before?
No, sure. So the model is essentially an HMO model. And this entity is obviously finalizing with its other investors and other partners. They could be healthcare companies, they could be insurance companies, they could be development finance institutions, they could be private equity players. There's a whole bunch of people that it will speak to. Now, what is this entity trying to do? It is basically saying for the 4 crore people who buy insurance, I want to give a hassle-free experience. They should not interact with 2 words, bill and claim. They should come to me for getting treated, get treated, and go home. And it's my job to make sure they stay healthy. So I would probably overinvest a bit in their wellness, in their care, in their post-hospitalization treatment, so that their chances of falling in and for coming back to hospital are the lowest. Please appreciate. No, it's a very important thing I'm trying to say. This entity actually makes more money if its hospitals are empty. And I think that is where people have not understood what this entity is trying to do.
Exactly. So yeah, absolutely. Let's also bring in Alok. He's been patiently listening to us, quizzing you. Alok, that's exactly what we need to understand, that this new, and it sounds actually almost too good to be true, right? Because as Yashish very rightly described, up until now, the interests of a hospital company and the patient or the insurance company have been at odds. That's the way the model works. The hospital wants to maximize profits and the insurance company or the patient wants to minimize cost. You are looking at setting up this new company, which is going to bridge the gap. How is that even possible? And again, who are the other investors or potential like-minded sort of people who will come together with you on this foray?
Yeah, Yashish mentioned there are 2 parts, right? One part is whether it's good for the insurance industry or bad for the insurance industry. And if it's good for the insurance industry, it's good for Policybazaar or PB Fintech as well, right? So there's a part which I think we have explained enough in the last 5 minutes. Now, coming to this particular venture, there are 2 parts. One is the asset part, which is the hard part in terms of hospital, land, building, whatever. And the second is the operation and management part of this, which actually controls the customer experience. Our interest and the industry interest actually is to manage that O&M part. If you manage the O&M part, asset can be owned by anyone. You know, if you look at a lot of examples from manufacturing across the world or hotel industry from across the world, you don't need to own those assets. You need to own the experience. Now, when
Yeah.
it comes to
But the asset owners, Alok, but whoever is the asset owner, you might be renting the asset, I get that, and this is just an operation and management. Whoever is the asset owner, they will want the highest ARPOB. At the end of the day, they'll demand
No.
from this
So-
company, right?
No. So this is not asset owner in terms of hospital, right? This is asset owner in terms of, just think of Taj Hotels managing some hotels which are owned by someone else but managed by Taj. Or Apple getting someone to create a phone for them where they manage the design, they manage the marketing, they manage the brand, but someone is creating that phone for them. They're manufacturing the phone for them. So the person who is owning the asset has a very different alignment. A person who is managing the experience has a very different alignment. Now, in this particular case, the investment is going into an entity, or it's proposed to go into an entity, which will eventually own the experience. But to you to get there, you know, you can't have on the day one that, okay, I'll manage the experience, but someone owns the asset. Just think
Yeah.
of how McDonald's
Got
would
it.
have started. They would have
Yeah.
created few
No.
their own units and then got into franchisee model, right? So you have to start somewhere. You have to do the POC, and once you have done the POC, then asset can be owned by anyone.
No, absolutely. I had a couple of questions and we're running out of time. So very briefly, Yashish, will this be a conflict with other hospitals?
We are not even thinking about that. This hospital is going to be aligned to the insurance industry. We are not really thinking about what it does to the other hospitals. I do believe it will, if successful, set benchmarks for the others, because today people can argue that, listen, costs are just going up, we can't manage them. But if one entity is able to reverse that,
Yeah.
then an argument gets created that, hey, it's possible, so why can't you?
But if PB, but
interests
if
are
PB,
misaligned.
got it. But if this drives sort of footfalls to a certain network of hospitals, I mean, will
Yes.
hospitals outside of this network, obviously they won't like it. I'm saying that does this in any way hamper your core business?
In India, there is enough demand for for healthcare. I don't think that is the challenge, and I think everybody has their own market. This is meant for middle class India. That middle class person cannot afford 78,000 per room night. Let's be very clear.
Got it. Absolutely. I mean, we can barely afford, and I completely agree. And we are middle class India. Yashish, just a quick point. Does this XYZ entity already exist, or this is to be created? I mean, this is yet to come up.
No, this XYZ is yet to be created.
Okay, and this will require this entire thing will require shareholder approval as well, or no? Just board approval?
No, it will not require shareholder approval. It's a minority investment, which is what our IPO funds were raised for and have been allocated, have been earmarked for that already.
Got it. We'll leave it there, gentlemen. You know, great to have both of you and really coming out and talking to us about this. Appreciate your time here on CNBC TV 18, Mr. Dahiya, Mr. Bansal. Really great speaking with the both of you.